Recessions bring fear, volatility, and uncertainty, but they also bring opportunity. When the economy slows down, many stocks get crushed, but a select few not only survive, they thrive. These are companies with strong balance sheets, essential products, pricing power, and loyal customer bases. They're the ones that keep growing even when consumer spending tightens, and they can give your portfolio the stability and upside needed during turbulent times. Welcome to Crown Trading, where we specialize in teaching investors how to trade momentum and growth stocks. Whether you're looking to protect your capital, earn reliable dividends, or even position for upside during a downturn, these 4 companies stand out. 1. Costco, the king of consumer staples. When economic times get tough, people stop splurging, but they don't stop spending on essentials. And when consumers want more value for their money, they go to Costco. This warehouse giant thrives during recessions by selling food, household goods, and toiletries at deep discounts, all bundled in bulk for maximum savings. Costco's strength lies in its membership-based model, which brings in recurring revenue and builds consumer loyalty.
We're Costco guys. Of course we go shopping while eating a chicken bacon.
As of 2024, it had over 130 million cardholders, with a renewal rate of over 90% in the US and Canada. Even in tough times, customers keep their memberships because the savings far outweigh the annual fee. In fiscal 2024, Costco generated more than $240 billion in revenue, and its consistent comp store sales growth proves that it's more than a discount retailer, it's a recession-resistant machine, giving it flexibility to expand globally and invest in new initiatives like same-day delivery and e-commerce. Costco is a classic flight to safety play, and that's why it often outperforms the broader market in recessions. 2. McDonald's, comfort food meets consistency. McDonald's benefits from what economists call trading down behavior, when consumers opt for lower-cost alternatives without sacrificing convenience or familiarity. In the fast food world, McDonald's owns that space. With over 40,000 locations in more than 100 countries, its heavy franchise footprint ensures strong free cash flow and reduced operational risk. In 2024, the company posted more than $25 billion in revenue, and its same-store sales increased despite inflationary pressure. Digital sales now account for more than 40% of its business in key markets, and the company continues to expand its mobile ordering, delivery, and loyalty platforms. It also pays a reliable dividend, yielding about 2.4%, and has increased its payout for more than 45 consecutive years. So whether the economy is booming or slowing, McDonald's continues to serve up stability, scale, and shareholder value. If you've enjoyed this video so far, hit the thumbs up button down below. That way you can help spread our content to as many people as possible. Also, if you are interested in getting our top stock picks that work in any market environment emailed to you every week, hit the link below in the description to get our next picks now. 3. Johnson & Johnson. Recession or not, people don't stop needing medicine. As a global healthcare leader in pharmaceuticals, medical devices, and consumer health, J&J provides products that are mission-critical, not discretionary. In 2024, Johnson & Johnson generated over $94 billion in total revenue, with nearly 50% coming from its high-margin pharmaceutical division. Drugs like Stelara and Darzalex continue to drive growth, while its medtech business supplies hospitals with essential devices and surgical tools. That's resilience in action. J&J also recently completed the spin-off of its consumer health division, Canvuay, allowing it to focus on its higher-growth, higher-margin businesses. Johnson & Johnson has raised its dividend for 60 consecutive years, putting it firmly in dividend aristocrat and dividend king territory. It has a rock-solid credit rating, over $20 billion in free cash flow annually, and a fortress-like balance sheet. In volatile markets, healthcare stocks offer a safe haven, and J&J's blend of reliability, growth, and income makes it a cornerstone stock during economic downturns. 4. Procter & Gamble, PG. Everyday essentials that never go away. When recession hits, people may cut the fancy stuff, but they'll still buy toothpaste, detergent, diapers, and razors. That's where Procter & Gamble excels. As the maker of iconic brands like Tide, Pampers, Gillette, Bounty, and Crest, PG products are found in nearly every household worldwide, and they stay in the shopping cart even during economic strain. In 2024, Procter & Gamble brought in more than $82 billion in sales, and it maintained double-digit profit margins despite inflation. Its pricing power allowed it to pass costs on to consumers without losing market share, which is a rare strength in a tightening economy. The company operates in 5 core segments: beauty, grooming, healthcare, home care, and family care, offering a diversified and recession-proof revenue base. PG has also invested heavily in AI and digital supply chain enhancements, giving it an edge in operational efficiency. Add to that a dividend yield of 2.5% and a 67-year track record of dividend increases, and you've got a business built to weather any storm. When you're looking for steady cash flow and defensive strength, PG is as reliable as it gets. Recessions separate the fragile from the formidable, and these four companies are built to last. Whether it's Costco's unbeatable value, McDonald's dependable demand, Johnson & Johnson's critical healthcare portfolio, or Procter & Gamble's daily necessity empire, these stocks offer exactly what investors need during tough economic times: resilience, cash flow, and consistency. If you're looking to protect your capital, earn steady income, and still capture upside, these recession-proof stocks should be at the core of your portfolio. While others panic, you'll be positioned with names that don't just survive recessions, they lead through them. Watch the next video on the screen to learn more about the momentum strategies we are using in the stock market.